Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Shutterstock Inc. Annual Report. Shutterstock Inc. offers a wide range of businesses and services to its clients. At the core of its offerings are image services, which include photographs, vectors, and illustrations that cater to various visual communications needs such as websites, marketing materials, corporate communications, and publications. In addition to images, Shutterstock provides footage services, comprising video clips in HD and 4000 formats, created by industry experts with cinema-grade effects. These videos can be integrated into websites, social media, marketing campaigns, and cinematic productions. The company also offers music services, featuring music tracks and sound effects that complement its image and footage offerings. Furthermore, Shutterstock provides 3D models used in various industries such as advertising, gaming, retail, education, design, and architecture. Its generative AI content service generates images from algorithms trained with ethically sourced content. The company also operates a collection of graphics interchange format visuals and stickers that supply casual conversational content. Shutterstock offers its services under multiple brand names, including Shutterstock, Envato, Pondfiv, TurboSquid, PicMonkey, PremiumBeat, Splash News, and BigStock. Its client base includes corporate professionals and organizations, media and broadcast companies, small and medium-sized businesses, and individual creators, who can access its services through digital, live sales, services, and client management channels. The stock price of Shutterstock Inc. has experienced a significant decline over the past year, dropping by more than 40% from its 52-week high. Several factors have contributed to this decline, with the most notable being the company's financial underperformance. In February 2026, Shutterstock reported disappointing Q4 2025 earnings, missing analyst estimates and leading to an 11.4% drop in stock price. This was followed by concerns over the impact of artificial intelligence on its business model, which could disrupt its core services. The company's performance also lagged behind the S&P 500, with a return of -29.6% over the preceding year. Additionally, increased short interest and broader market weakness, affecting digital media and technology stocks, contributed to selling pressure on Shutterstock's shares. Furthermore, the company's decline in contributor earnings, dropping to third place in monthly earnings for a contributor behind Adobe stock and iStock, has also been a concern. While a proposed merger with Getty Images has been ongoing, it appears that the primary drivers of the stock price drop are the company's financial underperformance and concerns over artificial intelligence disruption. These factors have led to a significant decline in Shutterstock's stock price, exceeding 40% over the past year. Shutterstock Inc. market capitalization of $1 billion is materially smaller than most of its industry peers of roughly $2 billion. Shutterstock Inc. trades at a lower price-to-earnings ratio of 9 times and a lower price-to-book ratio of 0.92 times relative within the industry. This makes the stock appear attractively priced. However, the broader industry is also trading at low valuation levels, suggesting sector-wide pessimism rather than the company-specific undervaluation. Further evaluation is required to identify if the company worthy of investment, or could it be an extended period of low valuation or a value trap. The leverage on the balance sheet appears elevated, with liabilities of 60% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets in equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The company have a dividend yield of 9.56%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline for Shutterstock can be categorized into several key areas. Firstly, the company's content revenue growth has been inconsistent, with a 2% increase in constant currency basis in 2025, a 3% increase in 2024, and a -7% decline in 2023. On the other hand, data, distribution, and services revenue has shown significant growth, increasing by 16% in 2025, 28% in 2024, and an impressive 256% in 2023. This segment is driven by subscription-based products, which have seen growth due to estimated content download patterns based on historical activities. Transactional revenue from individual content licenses at the time of download also contributes significantly to Shutterstock's revenue. However, fluctuations in foreign currency exchange rates can impact the company's financial statements, as a significant portion of its revenue is denominated in foreign currencies. Acquisitions and business combinations, such as the one with Getty Images, can also affect Shutterstock's financial statements, including fair value measurement. Ultimately, customer download activity remains a crucial driver of revenue for the company, with estimated content download patterns based on historical activities used to determine revenue from subscription-based products. The net income of a company underwent significant fluctuations between 2023, 2024, and 2025. In 2023, the net income was $110,269 million, but it plummeted to $35,932 million in 2024, representing a staggering 67% decrease. However, in 2025, there was a slight recovery with a net income of $45,496 million, marking a 26% increase from 2024. The profit margins also experienced considerable changes during this period. The net income margin decreased by 69% from 12.6% in 2023 to 3.8% in 2024, but increased by 21% to 4.6% in 2025. On the other hand, the adjusted EBITDA margin remained constant at 27.5% in both 2023 and 2025. The reasons behind these changes are multifaceted. Increased competition and reduced demand for products contributed to the decline in net income and profit margins. Additionally, the allowance for doubtful accounts increased by $3.4 million as of December 31, 2025, which further impacted the company's financial performance. Other factors such as potential increases in operating costs due to payment-related risks and interchange fees, changes in income tax laws or regulations, and uncertainty regarding the effect of TCJA on provision for income taxes also played a role in shaping the company's net income and profit margins during this period. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. According to the latest figures, the net cash provided by operating activities has reached $166,686 million for 2025. This substantial increase signifies that the company is successfully converting its profits into cash, which is a crucial indicator of its financial health and stability. The positive trend in operating cash flow suggests that the company's management is effectively optimizing its operations to generate sufficient funds to meet its obligations and invest in growth opportunities. The company's debt level and interest expenses have undergone significant changes over the past few years. In terms of interest expenses, there has been a substantial increase from 2023 to 2025, with a net change of $14,969 million, representing a staggering 700% rise. This growth is attributed to an increase of $6.3 million in 2025 compared to 2024, and a significant jump of $8.7 million from 2023 to 2024. The company's debt level has also seen notable changes. As of December 31, 2025, the total debt stood at $274.7 million. However, it is essential to note that there was no change in the revolver A and R credit agreement, with both 2025 and 2024 figures remaining at $155,000. On the other hand, the term loan under the same agreement decreased by $3,488 from $119,598 in 2024 to $116,639 in 2025. Overall, these changes indicate a substantial increase in interest expenses and a moderate change in debt levels over the past few years. The company's performance across various segments and regions has been a mixed bag. On the positive side, international operations have been a significant contributor to revenue, accounting for 59% of sales in 2025. This is a testament to the company's ability to expand its reach globally. However, there are also areas of concern. The New York City corporate office is vulnerable to climate-related risks, which could impact business continuity and operations. Furthermore, foreign countries pose potential risks due to various factors such as lower consumer spending, lack of internet adoption, longer payment cycles, increased credit risk, higher payment fraud, reduced protection for intellectual property rights, and difficulty enforcing contractual rights. These challenges highlight the need for the company to develop strategies to mitigate these risks and ensure continued growth in its international operations. Shutterstock's management is optimistic about the company's outlook, as evident from their strategic investments and focus on growth. The company is prioritizing product development to enhance customer experience and increase efficiency, while also expanding its offerings through acquisitions and mergers. This includes the recent Getty merger, which will further boost Shutterstock's capabilities. The shift towards a subscription-based business model is also a key strategy, with the company focusing on monthly recurring revenue. Additionally, Shutterstock plans to invest in cloud-based services and infrastructure to improve scalability and efficiency. These investments are expected to drive growth and increase revenue, as seen in the company's financial performance, which has been steadily increasing. Management's emphasis on customer experience is also noteworthy, with a commitment to delivering value to customers through product development and acquisitions. The company's ability to pay comparable cash dividends on a quarterly basis suggests a strong financial position, further supporting its optimistic outlook. Overall, Shutterstock's management appears confident in the company's future prospects, driven by its strategic investments and focus on growth. The company has demonstrated a commitment to returning value to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company initiated a quarterly cash dividend in February 2020, marking a significant milestone in its history. Since then, it has consistently paid out dividends, with a notable payment of $46.5 million for the year ended December 31, 2025. The company has also been active in buying back shares, with a share buyback program authorized up to $100 million. As of December 31, 2025, there was still $30.2 million remaining under this program. The company has repurchased approximately 5.5 million shares at an average cost of $48.86 since 2015, demonstrating its commitment to reducing the number of outstanding shares and increasing earnings per share for existing shareholders. Overall, the company's dividend payments and share buybacks demonstrate a clear focus on returning value to its shareholders and creating long-term value for the business. That concludes the financial summary for Shutterstock Inc. Feel free to comment below, and I will be happy to answer them when possible.